If you want to know what it takes to become wealthy, then you should learn from somebody who's actually done it. And Naval Ravikant put together some of his steps on what it takes to become wealthy, and he is the co-founder of Angie's List, and that's what we're going to be analyzing today. What's up, everybody? I'm Jaspreet Singh from theminority-mindset.com, where money minds rethink rich. Naval is an entrepreneur and an investor and the co-founder of Angie's List, which was sold for $500 million. And he had a tweet storm one day where he went through all the steps that he thinks that it takes in order to become wealthy. Now, if you want to read all the tweets yourself, I'll put the link to the tweet storm in the description. But in today's video, I want to dissect these tweets and really go over the 3 proven strategies that he talks about if you want to become wealthy. Now, I know these tweets are kind of old. They're back from 2018, but the education and the things that we can learn from these tweets has not changed. Let me start by talking about the first thing that you need to do if you want to become wealthy according to Naval. But before I get into that, I need you to do me a quick favor and smash that thumbs up button below. And a quick reminder, if you are interested in learning more about how you can be a successful stock market investor, you can get a free 10-day trial to our Stock Market Insiders program, where you get access to a weekly stock market coaching session. These are coaches who are not just coaches, but these are real stock market investors who've been investing for years. They've had very successful returns, and they have hundreds of thousands, if not millions of dollars in the market. So they're speaking from experience. You can ask your questions, and you get access to a community of serious investors. So if you want to learn more and see how you can get started with Stock Market Insiders, I'll put the link to how you can get started with a free 10-day trial. That way you can try it out and see if it's worth it for you in the description below. After the trial, it's just $47 a month, and you can try it out to see if it's worth it for yourself. You can go through the actual coaching sessions, you can go through the previous sessions, you can chat in the Discord, and then see if it's right for you. So if you want to learn more, I'll put the link to how you can join in the description below. The first thing you got to do if you want to become wealthy is you have to seek wealth according to Naval. So what he says is, if you want to get rich without getting lucky, you have to, quote, seek wealth, not money or status. In his tweet, he breaks it down. He explains what wealth is, he explains what money is, and he explains what status is, which is very impressive to do in just one tweet. So what he says is that you need to be seeking wealth. And what wealth is when your assets are paying for your liabilities. I'm just going to abbreviate that. Liabilities. Why is that LIB? Let me make that liabilities. So when your assets are paying for your liabilities, this is what wealth is. You should be seeking this. You want to own assets which pay for your lifestyle. Money, according to him, is what you use to transfer and exchange for services or goods. So this is just something that you use to exchange one thing for the other. This is what a lot of people associate with being rich. I have money to buy a fancy car. I have money to go on a vacation. What he says is, you don't want this, you want your assets to buy this for you, because your money will disappear. You can have $100,000, but as soon as you spend it, it's gone. Then he talks about status as just your hierarchy in the social world. So this is social. How many followers do you have on Instagram? How many friends do you have? Who's in your contacts list? All these things can help you be more social. But if you really want to become wealthy, you need to understand what wealthy is. This is what you need to strive for, not this. Obviously now, who you know can help you earn more money and it can help you become wealthy. But if you really want to become wealthy, he says that you need to put more focus here than you do anywhere else. Now, this is where a lot of people start to get uncomfortable. They don't like talking about money because for a lot of us, money was taboo in our homes. And we don't like talking about owning assets and buying assets because people feel like it's unethical. That's what Naval says. And so he goes on to say in his tweet that there are ways to seek ethical wealth. But if you secretly do not like wealth, it will elude you, meaning it will leave you and you will no longer have this wealth. We have a lot of people in our society that hate other people just because they're rich or because they're successful or because they're wealthy. And what he's saying is, if you despise wealth, it will leave you. And so what you need to do, instead of hating people who became successful, is understand what they did in order to become successful. That way you can become successful yourself. If you don't like what somebody else is doing with their money, if you don't like the way they act as a rich and wealthy person, then what you should do is become wealthy yourself and then be an example of how wealthy people should act. That's why Naval said, ignore people playing status games. They gain status by attacking people playing wealth games. Haters are everywhere. People are gonna hate you for what you do, what you don't do, the way you look, the way you don't look. And so what you have to do is, if you want to become wealthy, is ignore all that noise and continue focusing on your wealth. This is where things get interesting because you're probably wondering, okay, how do I actually become wealthy now? What do I do to achieve this sort of wealth? And what Naval says is you will never get rich by renting out your time. You must own equity, a piece of a business to gain your financial freedom. So the assets that he's talking about is business. You can start a business, you can invest in a startup, or you can invest in companies on the stock market. That's the way that he's talking about that you can earn these assets, which will then pay for your liabilities and pay for your lifestyle, because it's impossible for you to achieve this sort of wealth by just working, renting out your time in exchange for money. What you're doing then is you're earning this. You're earning money, right? You go to work every single day and you get a paycheck. That's money, but you don't own any assets. You don't have anything that's going to continue to pay you after you stop working. If you want to become wealthy, you need to keep getting paid even if you're not working. So what you need to do is, okay, you go to work, you get your paycheck. Now you want to use your paycheck to buy assets. The assets that he's focusing on are businesses because he built a very successful business and that's where he made his wealth. So you can buy ownership in companies either by starting your own company, you can invest in startups, or you can invest in companies on the stock market, and then you build equity ownership in these companies, and now you have executives and other people working in companies working to grow the company to make you ultimately more money. So now your money is working hard to make you money without you having to physically work to grow that money because you have the team at the company working to grow and build that company bigger. So if you want to become wealthy, the very first thing you got to do is you need to go out and seek wealth. You don't want to seek money, which means you don't want to just seek a high-paying job. You want to use your money to buy wealth. And you don't want to just be seeking status. You don't want to just be that cool person because that doesn't necessarily translate to wealth either. If you want to become wealthy, you have to focus in on the wealth, which means you need to have your assets, which are paying for your lifestyle. And in Naval's case, he's talking about owning businesses. This brings me to the second third of his tweet storm where he talks about how to become wealthy. You need to use the internet. What he says in his tweet is, quote, "The internet has massively broadened the possibility space of careers. Most people haven't figured this out yet." The internet has changed the world, not just for business, but also for learning. And we really saw this happen in the 2020 pandemic because, we've seen that education is changing. People are realizing that, okay, I'm graduating college with somewhere between $20,000 and $200,000 worth of student loan debt, and it's not guaranteeing me a certain job, it's not guaranteeing me a certain career, and sometimes I still don't know what I want to do. And people have started to realize that I need some real education. Then came the 2020 pandemic, and everybody started to go to school virtually. So you have students that are paying $40,000, $50,000, $60,000 a year to go to a certain university to get a certain name, are now watching their classes online, on Zoom or whatever web meeting app that they're using. And that's when people started to question, why am I paying $40,000, $50,000, $60,000 a year to learn something when I can just go onto YouTube and learn something similar from a teacher that's actually doing what they teach and from a teacher that loves what they're teaching. And now I, the student, can pick my teacher. Because when you go onto YouTube, if you don't like the way that I talk, you can just hit that X button and go watch somebody else. And the interesting thing about YouTube, especially YouTube, because that's the thing that I understand the most, is you don't start a YouTube channel with the purpose of making money. I mean, I'm sure some people do. But you're never going to become successful if you go onto YouTube with the sole purpose and sole goal of getting rich because it is so hard. The people that are actually making it on YouTube are people that do this because they love what they talk about and they're passionate about what they talk about. When I started our YouTube channel, Minority Mindset, I wasn't doing this with the purpose of making money or starting a business. I did this as a hobby. I didn't even know that you can turn advertisements on your videos when I first started making videos because this was just something that I wanted to do. I first got scammed when I was launching a different business, so I started talking about how to launch a business without getting screwed over. And I was talking about all the things that I wish I had learned when I started. So I was talking about money management and investing. And this was just something that I did as a hobby. I did this because I loved what I talked about, and this was something that I needed to get out. Now Minority Mindset has transformed into something a whole lot bigger. We're a full financial education and media company now, but that's not how I started. But that passion is still there. I mean, I am so passionate about everything that I talk about because these are things that I had wished that I had learned when I started. These were things that I wish somebody would have told me, which is why everything that I talk about is from my heart. And so that's the advantage of the internet, especially YouTube, is you can learn from people that are really passionate about what they do, who love teaching and are doing this because they want to, not just because they want a paycheck. And that's the advantage that the internet has, and more specifically YouTube, because now you can learn from somebody who you actually want to learn from. And the best part of all, watching YouTube videos doesn't cost you any money. Education is the backbone for success. But the question is, where do you get that education from? Because everybody assumes that you have to get this education from a classroom. But that's not the case. I mean, that education is becoming obsolete because what we need more and more are creative thinkers, people who can think outside of the box. And that's not always something that you're learning in the classroom. And so this education is so important. And now people are realizing that, hey, I can learn different things and more unique ways of thinking from YouTube, which is going to give me more success in the future, or not even just YouTube, from the internet. And so that's where people are learning. They're learning to think outside of the box. And what Naval says is play iterated games. All the returns in life, whether in wealth, relationships, or knowledge, come from compound interest. Education compounds, and the opportunities that are going to be around us keep changing day after day and year after year. I mean, just a few years ago, cryptocurrency was not something that anybody talked about. You never heard cryptocurrency on the news. Now, it is a whole new asset class that is taking the world by storm. The world is changing. The internet is changing the world. I was at a financial conference not too long ago, and there were so many young people, like between 19 and 25 years old, that were making multiple six figures a year because of TikTok. People making $300,000, $400,000, $500,000, $600,000 a year because of TikTok. You have so many new millionaires because of cryptocurrency. The world is changing, not just from where you can earn, but from where you can do business. And you now want to be ahead of the curve, which means you need to start learning and you need to start doing and need to understand where the world is moving. That way you can be on top of it and take advantage of the changes, because we're seeing the world change right in front of us. And you have a lot of people in this world that are just dinosaurs, that are sitting there criticizing everything, that are saying this was never going to change the world is never going to change like that. But the world is changing right in front of us. And you got to decide, do you want to be on the changing side of the world, or do you want to be on the dinosaur side of the world? And this brings me back to what Naval says when it comes to finding people to do business with. What he says is, 1, pick business partners with high intelligence, energy, and above all, integrity, and don't partner with cynics and pessimists. Their beliefs are self-fulfilling. The world is full of haters, and you don't want to be doing business with a hater because they're going to slow you down. So now the question is, how do you find these type of like-minded people? Well, you can go back to what Naval says. Use the internet. The internet has changed the way that we learn, it's changed the way that we earn, and it's also changing the way that we connect. Like, for example, if you want to meet other minority mindset thinkers, we created a free Discord community called the Guac Talk server, because as we all know, extra guac is truly a symbol of extra wealth. And in this community, you have people talking about the stock market, the real estate market, the cryptocurrency market, and all things building wealth. This community is completely free, and you can talk about these things and you can network with other minority mindset thinkers. If you do want to join this community and see more, I'll put the link to how you can do that in the description below. But this is how you can start meeting other people. And when you start meeting people and you want to learn from people and network with people and do business with people, you need to make sure that, 1, their mindset aligns with yours, and that they're not cynical or a hater, like what Naval says. At this point, you might be wondering, okay, so what should I be learning on the internet? Well, Naval answers that question in his tweet storm, because he says that you need to learn 3 things. You need to learn how to sell, you need to learn how to build, and you need specific knowledge in whatever it is that you're doing. He says that if you know how to sell and if you know how to build, you'll be unstoppable when it comes to building wealth. And then when it comes to specific knowledge, he talks about how if you have specific knowledge, then you cannot be replaced and you're building value that people will need from you. He says that specific knowledge is knowledge that you cannot be trained for. If society can train you, it can train somebody else and replace you. There are almost 8 billion people on this planet, and every single person is unique, but many of us are trying to be just like everybody else. Everyone's just trying to fit in and be the same. But what he's saying is you need to be different. Stop thinking like the majority of people and start thinking like the minority of people. You need to find what is specific to you, because we all have different passions, and this is what makes entrepreneurship so exciting, because entrepreneurs are trying to change the world. Somebody might be really passionate about financial education. Somebody else might be really passionate about world hunger. Somebody else might be passionate about diabetes. Somebody else might be passionate about AIDS. Somebody else might be passionate about pollution. And now, when you have this type of specific knowledge, you can do something to counter these world problems. And when somebody's really passionate about something, they can go and work towards that. Nobody can do everything. but we all have different goals and different passions, and that's where he's saying you need to specialize. You need to learn what you like, and you need to go deep into that. That way you have some sort of skill or some sort of knowledge or some sort of expertise that cannot be trained for. This is something that the world will have to come to you for because nobody else can present that value. So now, according to Naval, if you want to become wealthy, the first thing you got to do is you have to seek wealth. The second thing you have to do is you have to use the internet, use it to learn, use it to earn, and then you have to use leverage. What Naval says more specifically is fortune requires leverage. Now, a lot of times, especially when you're on a financial channel, you assume that leverage means borrowing money. I go to the bank, I borrow money, now I'll use this borrow money to go out and buy a property. But that's not exactly what he's talking about. He starts by giving a very interesting quote. What he says is, quote, "Give me a lever long enough and a place to stand and I will move the earth." And then he says that fortune requires leverage. Business leverage comes from capital, people, and products with no marginal cost of replication. So if you want to become wealthy, then you need to also understand leverage, which means leverage of money, leverage of people, and leverage of products. First, he talks about leverage of capital, which means leverage of money, using other people's money to invest into your ideas or assets. And the way that he says that you can get this money is by, again, your specific knowledge, the thing that we just talked about. You use the internet to expand upon your specific knowledge because now you have some sort of skill set that nobody else can replicate, and now you have something that you can leverage to get some money to invest into maybe your business idea or whatever asset that it is that you want to invest in because you have that specific knowledge. People means exactly that. You can't do everything yourself, and you shouldn't try to. You need to hire people that are smarter than you to help you achieve this wealth. Now, there's a few different ways that you can kind of take that. If you're building your own business, you're going to have to hire people to help you build your idea. Now, this can be hard, especially if you're starting off with your business because you don't want to relinquish some of your control and you're not going to find somebody who works as hard or isn't as passionate as you. But if you want to build something big, you cannot do it alone and you're going to need help. And so you're going to have to find somebody and train them, which can be a pain, especially if you're doing it for the first time. You don't know how to train somebody. You have to find somebody, you have to train them, you have to grow them, and you have to trust them to help you build your business, which takes a lot of work. On the flip side, when you're not building a business, this means hire people that are smarter than you to help you manage your money and manage your assets. Remember, if you want to seek wealth, you need assets. So this might be investing in companies, investing in startups, investing in stocks, or this could also mean investing in other assets like real estate or whatever it might be. But now when you hire people that are smarter than you, this might mean hiring an advisor, investing in education, or hiring somebody to help you with your taxes, or hire an attorney to help you protect yourself against whatever might happen. So you need to have smarter people than you to help you build your team. That way now you can leverage their skills, their expertise, right? Their specific knowledge. You're leveraging what they know to help you make more money. And then he says you need to leverage products, more specifically code and media. And what he says about that is code and media are permissionless leverage. They are the leverage behind the newly rich, and you can create software and media that works for you while you sleep. And interestingly, he says if you can't code, write books and blogs, record videos and podcasts. So again, he's saying leverage the internet and create some sort of product which now can continue to produce revenue, can continue to grow, can continue to provide value to the world without you having to physically work. I'm not a coder. I don't know how to code, but I am on the latter side of his equation, which he says if you don't know how to code, make videos or blogs or other products on the internet like that. And with videos, there are videos that we created years ago that are still generating revenue today, because once you put this content on the internet, it's there and it doesn't leave unless you take it away or unless something might change in the future. But right now, when we put a video on YouTube, it stays there and it will continue to drive views as long as it's something that people want to search for. If you can create a product, it doesn't have to be videos, but if you can create a product that people will need, that you can build once and then continue to use it again and again and again, well, now you can let this thing out into the world and use that to help grow you, right? You're leveraging the internet to allow you to create reoccurring income, because now you have built one thing and it'll pay you again and again and again, and you can just keep building more and more of that thing. It's a multiplication game, it's stacking. So you want to keep stacking your value and keep stacking and stacking and stacking it, and now you build this whole library or array of your code or your content or your products or whatever it is That way now you can leverage off of everything that you created and it will continue to pay you, right? You're building these assets using your specific knowledge, which you probably got through the internet, and now you're leveraging it to continue to pay you. So what's the path to becoming wealthy without getting lucky according to Naval? Number one, you need to seek wealth, not just money, not just social status. You need to actually seek wealth. Second, you need to use the internet. Use the internet to learn, use the internet to earn, leverage the internet. And third, you need to understand leverage, because if you want to build real fortune, you cannot do it yourself. You need to leverage money, you need to leverage other people, and you need to leverage other products. That way you can build something that will continue to pay you, even if you're not physically working yourself. If you enjoyed what you saw so far, then you're gonna love this. The majority of people go to work every single day to make money, and then they spend this money on rent or their mortgage, on food, and a little vacation here or there, and then they wonder where all their money went. Hey, where'd you go? But what if I told you that there was a way that you can clone yourself? You mean like this? Cool. No, I mean clone the way you earn money. That way you don't have to physically go to work each and every day to get paid. All right, Just Breathe clone, I'm going to sleep. Go make some YouTube videos. Whew. Well, it is possible, and you don't even need a clone who's gonna go to work for you while you're sleeping. Investing is a way for you to multiply your income slowly, but instead of you going to work, you send your money to work, and your money is gonna work 24 hours a day, 7 days a week to attract you more money. Now, unlike what everybody on the internet says, it is not easy, and it does not happen overnight. It is a slow process for you to grow your money by sending your money out and slowly attracting you more money. This way you can build more wealth. To understand how this works, let's pretend that everything you do is an investment. You need a car, vroom vroom. You can spend $60,000 on a sweet Beamer, or you can spend $8,000 on a nice and used working Toyota. Both cars will safely take you from point A to point B, but when you drive that Beamer, people are gonna go, whoa. But when you're driving the Toyota, they're gonna go, oh. If you buy the Beamer, you are investing that extra $52,000 to hear people say, whoa. With the Toyota, you get to save that $52,000 in your pocket. When it comes time to sell your car, you were gonna sell your car for less than what you bought it for, whether you get the Beamer or the Toyota. But with the Beamer, you're gonna be out tens of thousands of dollars more, but at least you heard people say, whoa. It's the same for your clothes. You can buy $1,000 buying a scarf at Gucci, or you can spend $100 buying a whole wardrobe at Walmart. When everybody sees you in the Gucci, they're gonna go, hey. When they see you in the Walmart, they'll go, hey. In this case, when you buy the Gucci, you are investing $900 more to hear people go, hey! And by the end of the time of your clothes, both of your clothes, whether it's from Gucci or Walmart, they're gonna be worthless. These are your obvious bad investments. I actually call these your consumer expenses, because as soon as you spend your money on these things, whether it's your car, your clothes, things like that, as soon as you spend your money on these things, your money is gone. These consumer expenses are the things that can help you look rich, but they keep you broke. But now, what about the investments that are not consumer expenses and that are not so obvious? Now, you take that $10,000 that you worked so hard for, and now you don't go and buy a car, you don't go and buy clothes, you save it. Now, you think you're doing the right thing, because if you spent that $10,000 on a brand new car, that $10,000 will be worth half of that amount in just a few years. And if you spent that $10,000 on clothes, it would be worthless. Now, your investment isn't doing half bad, because you can open up your bank account in a year or 2 years and still see that you have $10,000 in cash sitting there. If you bought clothes or a car, that $10,000 would be worth nothing. But if you're watching this video, you don't want to make half bad investments. Your goal is to build more wealth so you can live a financially better life. You need to have some money in your savings account, okay? That money is there to protect you from going into debt or to protect you from an emergency. You need that. But your savings are not there to make you rich. Saving your money is financially better than buying a bunch of nice cars and clothes, but it is not going to make you rich. Rich people did not become rich by saving their money. The only way that you can add to your wealth without physically working harder at your job or getting a promotion or working longer hours is by taking your money and now sending this money to work. Not by buying a car or clothes or saving your money, but putting it to work in a way where your money is going to attract you more money. The nice thing about this is your money doesn't get tired. It doesn't need to sleep. It doesn't need days off. It doesn't want long weekends off. And it doesn't need to go to the bathroom, okay? Your money can do a much better job at earning money than you can. And your money's efforts are scalable while your efforts aren't. You can only work 10, 12, 15 hours a day, but after that, you're capped. You cannot work 24 hours a day every single day of your life. It's just not physically possible, but your money can. Your money doesn't have a limit to how hard it can work, and your money is scalable because if you want your money to work harder, you just got to add more fuel, in this case, more money into the fire. You can think of it this way. Let's say you have a $100 bill. Now, you can go to the store and you can buy a nice shirt, and you will come back with a shirt and no money in your hand. Or you can take this $100 bill and you can invest it. Now, your money is going to go away, but after some time, the $100 bill might come back with a friend, another $100 bill. So now you have $200 because this $100 bill got you another friend, another $100 bill, and then you add in another $100 bill into this because you're working hard at your job and you earn some more money. So now you add more money into the mix, and now you have $300 bills that are going to go out and they're going to work to attract you more friends. In this case, more money. If you stick with this plan where you take a little bit of cash and you invest it, meaning you're not using it to buy you clothes or cars, you're taking this money and you're putting it into something boring that's gonna make you money, and now it's out working, and then you're working at your job and you take a little bit of extra money from your job every paycheck and you send this to your investment money. Pretty soon, you're not gonna be talking about investing hundreds of dollars or thousands of dollars. You're gonna be talking about investing tens of thousands of dollars or hundreds of thousands of dollars or even millions of dollars, because you're going to have more money going out to attract you more money. Now, this is not the funnest thing to do because you're not going to have the coolest clothes or the coolest cars because your money's out making you money. But this process works. The thing that makes this so difficult, and the reason why the majority of people don't do this, is because you need two things. You need dedication and you need consistency for this to work. Dedication means you got to say no to the Gucci and you got to say no to the Beamer for a little while until you can actually afford to buy these things without stressing about the money. No, not the Gucci! The truth of the matter is everybody says they want to be rich with their mouths. That's the easy part. But the majority of people are not willing to do what it takes, because if you actually want to be rich and be wealthy, that means you got to stop spending your money on the things that make you look rich today and spend your money on things that will actually make you rich and make you wealthy. And the tough thing about that is you can't show off your investment portfolio the way you can your new car or your new clothes. Yo guys, you want to check out my dividend portfolio? And the consistency means you have to stick with it, because this kind of money growth is very slow in the beginning. And the majority of people don't really want to wait that long. They want to get rich today. And when people have the mindset of, okay, I'm either going to get rich today or I'm going to get rich never, they end up getting rich never. You can think of this wealth building like rolling a snowball. You start by packing up a tight snowball, and then you put it on the ground and you start rolling it. And in the beginning, your snowball is not really growing because it's so small, so it can't attract that much snow very quickly. But if you stick with it and you keep rolling it, eventually your snowball is going to get bigger and bigger and bigger. And pretty soon your snowball is going to be huge. And now your snowball will be able to attract snow and get bigger 100 times faster than it could at the beginning, because now you have a bigger pile of snow that can attract you more snow faster. Your money works the same way. In the beginning, everybody starts off with a small pile of cash and you have to start with that. And so it's going to work slowly and attract you money slowly, but eventually it's going to get bigger, and as it gets bigger, it will work harder to attract you more money because you have more money working for you. The next thing you have to ask yourself is, how do you want to get paid? Because when you take this money and you invest it, there's more than one way that it can attract you money. If you have read our free ebook on money management and investing, you know that one way you can invest your money is going to generate you passive income, which puts more money in your pocket today. And the second way you can invest your money is a way that will make you appreciation, which is a way for you to make more money in the future. And if you haven't read our free ebook on money management and investing, you can do it for free when you sign up for our financial education emails, which are also free. You can get our free ebook and start reading our financial education emails by clicking the link up here or by clicking the link in the description below. By the way, our financial education emails are separate from our financial news emails. Passive income is a way for you to send your money out today. So you invest your money today, and now you're going to make a little bit of money every month or every few months or every year. One way that you can get this type of passive income is by investing your money in businesses, whether it be on the stock market or not. And now, every time this business makes a profit at the end of the year, this business will give you a check of your share of the profit. So now, instead of using your money to go out and buy a brand new wardrobe, you can use your cash to to go out and buy, let's say, a 1% share in a clothing store. Now, at the end of the year, if this clothing store made $100,000 of profit and you own 1% of this business, this clothing store will send you a check for $1,000 and you don't have to do any of the work because you're not an employee of the business, you're just an owner of the business, so you're entitled to the profits. A second way that you can get this type of passive income is by investing your money into real estate. And by the way, we talk extensively about real estate investing and stock market investing on our channel, so if you haven't subscribed yet, make sure you do that. Now, let's say you buy a home, not to live in yourself, but for somebody else to live in. Now, the people that are living in your home are going to have to pay you rent every single month for living in your property, whether you are sitting on a beach or whether you're sitting at a desk, because they are living in your property. You bought this asset, this investment, this home, and now they have to pay you rent for using your investment. That means every month you are going to get a $1,000 check from your tenants because you put in the work and you use your cash to buy this asset, this investment, this real estate property that will pay you with passive income. Appreciation is when the value of your investment grows. So if you go back to the business example of you buying a 1% ownership stake in a clothing store. Now, let's say that at the time of you buying this ownership stake, the clothing store was worth $100,000. And now they use the money that you invested and they use their profits to now go out and invest it into their business so they can make more sales and grow bigger. And after a few years, this business isn't worth $100,000, it's worth $500,000. Well, now the value of your investment just grew by 500% because the people that are running the business used your cash to help grow their business, and now your investment grew because of where you invested your money. It's the same with real estate. You might have heard your parents or grandparents talking about how they used to be able to buy homes, beautiful homes, for $20,000. Now that same home is selling for $200,000, $300,000, $500,000. And so because of this appreciation, if you buy a property for $100,000 today and the demand for this area goes up, that property could be worth a lot more in the future. Again, in all of these situations, it's not you physically going to a job to get paid. Now you are using your cash, which means you have to spend less than what you make and use this extra cash that you have and invest it and put it into the right places that are going to make you money. But in all these situations, you're not physically going to work to get paid. Your money is out going to work every single day to attract you more money. Now, are you guaranteed to make money when you invest? No, of course not. Investing has risks. You might even lose money, which is why you need to make sure you always do your own due diligence and don't just blindly listen to a random guy on, YouTube. But this is where financial education comes in handy, because financial education is what guides you and can help you make the right investments so you can mitigate your risk. And if you're looking for an easy way to up your financial education, that's why we have a free ebook and financial education emails for you in the description below. Thank you for watching. If you enjoyed this video, here's a video on things you should not do when you get paid that I think you'll love. And while you're at it, download our free guide on how to start generating passive income. And as always, keep hustling. I call it your net income because, well, every dollar you earn is not every dollar you keep. As soon as you make money, the first thing that's going to happen is the government is going to take their share in taxes.